Joining us live is the Chief Market Strategist at InvestSMART, Evan Lucas. You're our governor. Evan, you're our governor when it comes to money matters. Thank you. All right, let's go to the Philip Lowe now. The real governor. So he's got an address today. It's really interesting because the timing of this comes out this morning when a few details have emerged from 9 newspapers about what they're targeting on this review, who is going to be a part of it, and Philip Lowe's got this speech today. So plenty of attention on him today.
There is. So for those of you that are trying to listen to what the speech is actually going to be about, it's called Inflation and the Role of Monetary Policy. I mean, who would have thought a bigger title than that could be out there at the moment? It is going to be an incredible speech from the point of view that they are likely to follow what we're also seeing around the rest of the world. And if you didn't see it last night, the Vice Chair of the US Federal Reserve, Lael Brainard, released her speech that she's giving today to their major foundation, which actually had a statement that everybody's picking up on and expected for Philip Lowe to say something similar, which is that over-tightening gets to a point of a double-edged sword, was basically her wording, where we go past actually trying to affect inflation to having a risk around what we do to the economy and to employment. And do not be surprised to hear Philip Lowe say that today, because as far as we can see from Tuesday, they are now, in their view, at what we call the neutral rate. They're not increasing economic activity, but they're not decreasing it. But they are expected to go into over-tightening areas, and all that will be outlaid because the inflation genie is out. How do you grab the tail of the inflation genie and stuff it back in the lamp? It is a very, very, very hard thing to do.
Yeah.
That's why his speech will be so pressing.
Well, I mean, he's got forecasts wrong before, as we've just pointed out a little earlier, way wrong as a matter of fact.
Everyone has. And I think I need to say this. Everyone has. So last night, the Bank of Canada raised rates to 3.25%, and their cash rate was at 0.1%, like ours, this time last year.
But did they? Sorry, Evan. But did they make specific forecasts to homeowners that said you can have cheap money until 2024? Did they do that?
So they didn't give you the specific date. They did definitely say that they expect that this inflation story would be a long-term issue. And by long-term, they were saying several years.
Yes.
They didn't give the 2024 date.
See, that's the problem here, though.
So that is the debate, isn't it? I mean, you can say all of that. And I want to put that out there. We absolutely should be critical of the RBA. There is no doubt they got it wrong, but they are not the only one. And I think the other thing that needs to be pointed out here, and I'm not defending them either by what I say is, there needs to be a very clear delineation here between fiscal and political talk and monetary policy. Because monetary policy at the moment has to do this. As hard as it is to say, it needs to happen because inflation is much, much worse than anything else we can talk about. Because if all of a sudden it is impossible to buy the goods you need because inflation run rampant, then you've got a whole other crisis. And the Germans know about that very well with the Weimar government, all those kinds of things. So it's a hard place to be.
Yeah, so, I mean, my beef comes from that. The fact that this warning came out that homeowners would be, you're going to have this cheap money until 2024. So they took out these big mortgages based on our key money man's data. And it was way wrong. And I think that he should be held accountable for that. Are you now talking about over-tightening? Are we in danger of over-tightening?
We will go to over-tightening. There is clear signs of that. So I think you're going to see another 25 basis points in September, considering yesterday's GDP figures showed that consumption was a massive driver of what was going on. 2.2% increase quarter on quarter, 6% year on year. So far, those rate rises haven't taken effect. So yes, they will go to over-tightening. There is expectation now that it will probably be about 3% by Christmas.
So you could get it wrong again.
Yes and no. I don't know if there is a forecast in terms of where they were going. They have certainly said that they needed to keep raising rates to rein in inflation. So he hasn't given a forecast about how high it was going to go. That, again, is why the speech today at 1 o'clock at the Annika Foundation is going to be so key, because he's going to talk about that. They are going to talk about how you rein in inflation and over-tightening is part of it.
All right. Thanks as always, Evan. Thank you. We'll talk to you soon.